Wasting money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deeper seas, hoping to find something to bring back better times. Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Okay, hi everybody, good morning. Welcome to our daily revision session. Today our focus switches to macroeconomics and the UK economy in particular. So much to cover, so we've chosen 3 or 4 interesting topics, things what we think the examiner might have a focus on as we head towards the exams. So welcome to everybody who's joining us live. If you are live with us this morning, please subscribe to the channel so you can contribute your answers to the excellent, superb contributions from the collective so far this week. If you're watching on replay, just press that pause button when you need a little bit of time to think about the questions or to take a screenshot. So let's make a start. I've got 5 bubble quiz questions for you. Let's see how good our economists are today. So I'm going to give you a question, and the number of answers that are correct can range from 0, they could all be wrong, to all 4. So in the chat window, if you're joining us, please type in what you think are the correct answers. Let's have a look at the first question. Which of the following are likely macroeconomic effects of an appreciation in the value of sterling against the US dollar? So that's a little question on exchange rates. If the pound rises in value against the dollar, which of these do you think are likely macroeconomic effects of an appreciation? Sterling has been appreciating in the currency markets in recent times. What do we think? How many of these do you think are likely effects? How many are correct answers? So what do we think? Type in all the answers you think are correct. So if you think there are 4 correct, A, B, C, D. If you think there's just 1 correct, type in your letter. So quite a few of you choosing C as the correct answer. Path has gone for B. Kirsty thinks A and D are correct. Getting the answer, getting the idea here. Tom O'Connor thinks B and C, and Tyler confirms that. Liam thinks B and C. Sam thinks C and B, thinking slightly counterintuitively. Quite a few saying A. Well, let's have a look at the answer. We think B and D are the right answers there. If the pound appreciates in the against the dollar, foreign investors are more likely to buy US debt, because when that debt is repaid, it'll be worth more. So a strong currency often attracts financial capital. Yeah, falling prices for importing oil and gas is correct. A strong pound, imports cheaper, of course. And D is correct. D is right, because with imports cheaper, that should bring about price disinflation. So the strengthening of the pound in recent weeks has been a factor helping inflation fall back towards target. But strong pound does not make exporting to the States more profitable. Though you're making profits in dollars, let's say, by selling in Manhattan or selling in Boston, when you convert those profits back to pounds, you will get fewer pounds. So actually a stronger pound makes exports more expensive and reduces the profitability of exporting overseas. You get the idea? Let's move on to question number 2. Okay, here's 4 more options. Which of the following are likely to cause a rise in government spending? What do we think here? And there are lots of interesting things here: quantitative easing, mortgage rates, house prices, and money incomes relative to inflation. So which of the following are likely to cause an increase in consumer spending? So EJS says ACD. Che agrees. So does Tyler. Daniel thinks just A and D. Isaac's gone for D as a factor, and Fergus ACD. Great to see our regulars in the student collective who've produced some brilliant answers so far coming in. Sam's gone ACD. A lot of you going ACD. Well, let's double check. It looks like you've all revised consumer spending well. Yeah, QE, of course, in theory, will expand the supply of credit to the banking system. House prices going up. People might be able to borrow money on the back of that. D, of course, is when real incomes rise. Whereas B is the impact of the interest rate hikes in recent times, particularly in 2022. Great answers. Well done, everybody. Superb on that. Well done. Here's number 3. Which of these factors, which of these factors might cause a weaker trend rate of growth for the UK? So thinking about long-term growth dynamics for the UK economy, which do you think would have a negative effect on the trend rate of growth? What do we think? The options here are tax cuts, capital investments, outward migration of labour, and leaving the single market. Liam's gone for C and D, and Ned and Sam and Ravona and Shrikant both agree, or all agree. George and Harvey. Let's have a look at the answers. C and D. Yeah. So tax cuts normally pretty good for incentives and investment. A rise in investment should be growth enhancing, but outflows of labour, and most economists, not all, but most economists believe that the decision to leave the single market has probably cut the long-term growth rate for the UK. More about that later. Here's number 4, 2 more. So which components of the UK current account, balance of payments, were in deficit in 2023? Which of the components of the current account were in deficit? And this is nice provision because it tells you what the 4 components are: trading goods, trading services, net primary income, which of course is interest, profits and dividends, and net secondary income, which includes government transfers. What do you reckon here? Who's got great knowledge on the current account of the balance of payments? Hasn't come up for some time on the exam. Harvey thinks A, C and D. Sam ACD. Victor has gone for A and D. Let's have a look at the answer coming up on our screens. It is indeed A, C and D. Trading services strongly in surplus. We have a comparative and competitive advantage in many services. But actually last year, for the first time in some years, both primary income and secondary income were negative for the UK. You can see this in the chart. It's coming up on the screen now. I'll put together the latest balance of payments chart for you. There it is. Pardon me. Components of the current account since 2020. There's obviously been a lot of flux with things like COVID and things, but the blue is trading goods. The green is trading services. The orange is the primary income, negative, and the secondary income is negative as well. Okay, let's move on. So well done. Here's our fifth and final bubble quiz question. By the way, I love this question. Anybody gets this correct is an outstanding economist. Last 2022, using IMF data, PPP, which of these countries had a lower per capita income than the UK? What do we reckon? What do we reckon here? Which of these countries had a lower per capita income? Our four countries are Finland, the Netherlands, Iceland, and South Korea, which is a pretty hard FIFA qualifying group, unless it's the top three qualifying. George has gone for none of them. George is thinking, when will Wiley set a bubble quiz question when they're all incorrect? Victor's gone for B and C. Rosalind thinks B. Jacob thinks D. Lower per capita income. George Holmes thinks D. Okay, what do we think here? Well, here's the answer coming up. The answer is just South Korea, D. Well done, those who put it in. Freddie N got that correct answer there. So Finland, Netherlands, and Iceland all have quite substantially higher per capita incomes than the UK, which is something to think about. Okay, let's crack on. Well done. That's the bubble quiz. Let's start by just looking very quickly, if it's okay with you, in our time together. Here is some essential data for the UK. A lot of people last year took screenshots and just added to revision notes. Because, of course, the exam's been set. The exam was set nearly a year ago. So you don't need to necessarily know the latest data, but if you have a bit of information, that's a bonus. So inflation, of course, currently 3.4%. By the time you take the exam, it may well be below 2%, with the cut in the energy price cap due to kick in April. But the key thing here is inflation's come down from 11.1% down to 3.4%. How much of that is due to policy is another question. That's the evaluation. Growth last year, of course, was only 0.1%, the weakest growth since 2009. We've had a shallow recession. We may well be coming out of it by the time the exam happens. Base rate 5.25%. Unemployment, really important issue there, still low, 3.9%. There's been some adjustment to the measurement of unemployment. The yield on debt is 4%, government debt. The pound has appreciated against the dollar. It's now up to 127. Now, back in 2022, after the Kami Kwarteng budget, I'm mixing up my Tory politicians. The exchange rate was down at 105. It's now up to 127. But you can see there are per capita income $46,000, USA 70,000, Ireland 90. But of course, a lot of that's inflated by profits and output from overseas companies. And then another slide just adding to your database for the exam. The budget deficit last year was 4.5% of GDP, still large, albeit falling. It was 15%, of course, in 2021 during the pandemic. The national debt is just under 100% of GDP, £2.2 trillion. I think point 10 is worth noting. We now have the highest tax burden for 70 years. If you add all the direct and indirect taxes together, it's nearly 40% of GDP. Trade deficit in goods and services, current account of about 3% in deficit. And a couple of other things, we dropped 5 places in the competitiveness rankings. Edexcel in particular like asking questions about factors determining competitiveness. Well, we have dropped 5 places. Although the good news is that we've stayed the same on HDI, we're 15th. Okay, back to you, and then let's have a look at a question on interest rates. So here's the chart showing UK interest rates set by the Bank of England, of course. And another key interest rate is the yield on debt set by the market, set by the bond markets, essentially the cost of government borrowing, which was on the long-term decline from 2007 onwards, but has obviously reversed since. So here's my next question for the team. Can you please write down 2 impacts on the UK economy of a sustained rise in interest rates? Let's see what you can come up with. Have a go. Jot some thoughts down, and we'll post great answers on the screen to share the collective wisdom of the group. Most people will be revising interest rates, I guess. They started rising in 2021. chapter there talking about the exchange rate, which is a good point. Those of you joining us on the live stream, sort of hot take on this question, really have a look at the chat. There's some great thoughts coming through. And don't worry if you can't write a full answer in a minute. It's impossible. Just trying to get a snapshot. So Paul talks about increasing flows of hot money. Of course, Paul, that depends on relative interest rates, but a good point. Higher cost of borrowing, we can reduce consumption, and therefore hinting that significance, the biggest component of aggregate demand there. Really good point. Ollie Doherty has a really good point, if we can find that. Rosalind's point, reduced investment, the lack of borrowing, less spending in the economy as more people save. What have we got? Yes, so higher mortgage rates, particularly for those on variable rates. Now, what's really good about that answer is you're linking it especially for those on variable rates. A lot of people have, but a lot of people have to renegotiate their fixed rate in the next 6 months. Falling consumer confidence, increased propensity to save. What you've captured there, Ollie, in that answer is a whole panoply of points. Really, really good macroeconomics. Utterly fantastic. Well done. Here are my two contributions to the discussion. Yeah, so I would focus on investment, so consumer spending and investment. So I'd link the two together. Oftentimes, when you get a slowdown in consumption, you get a negative accelerator effect. Businesses just press the pause button on capital investment projects, and then that fall in investment can have an impact on productivity, innovation, long-term growth. And I think the chart I showed you on yields, remember that chart on the right-hand side? The yields go up to 4%. So if the government's having to spend at 4% on any new debt, that increases the interest cost of borrowing money. Something like, I don't know, 114 billion pounds spent on debt interest this year. Now, some of that stays in the economy. A lot of it leaves the economy. So there could be an opportunity cost there. Some really good answers, superb answers. Well done on that. Let's move on. Let's have a look at minimum wage. Now, somebody in the chat window before the session said, is minimum wage micro? Well, it's not really. It's both. It's synoptic. Often macroeconomics has micro foundations. So we know the minimum wage is going to go up by over £1. It's going to go up to £11.44 for all adults aged over 21. And obviously there's different rates as you get younger. So there's a big rise in minimum wage coming in on the 6th of April, just a few days away now. So I thought I'd ask two questions. Let's see what you can come up with. Can you give me two possible benefits to the economy of a £1 rise in the minimum wage to £11.44? Have a go. Let's see what we can come up with. And we'll post some answers on the screen. Minimum wage is going up by essentially £1 an hour to £11.44. What about some of the benefits to the economy as a whole, the macroeconomic context? Yeah, nice link there between Kirsty consumption and AD. And Ellie's got some good chains of reasoning there. We're talking about the budget deficit point. Pete comes with a nice concept there: disposable incomes, multiplier effects, income and distribution. Keep an eye on the chat window for the hot take on this question, because these are really, really good answers. It's not easy. If you can think of a point and get it down quickly, you can flesh it out in the exam itself. Alp 88 talks about increased supply of labour, meaning that firms have more choice. That's a really interesting point about perhaps some way of overcoming some of the labour shortages. Come back to that point in a second, actually. It's a nice little theory you can mention. Well done on that one. Okay, shall I take you through my answers? Conscious of time here, we have a half an hour together. Yeah, so I focused on incomes for low-paid workers and efficiency wage theory, which has been one of my favourite theories for many, many years. So obviously there's a direct increase in incomes if you still have a job in a low-paid job, so it can reduce relative poverty, can stimulate consumer spending. Quite a few of the answers in the chat window talked about high propensity to consume of people in these kind of jobs. That can then lift aggregate demand and growth. And critically, as somebody also mentioned, If people on low pay get more income in work, it reduces dependency on universal credit. So one of the key concepts maybe to note here, feel free to do so, is that there's a lot of working poverty in the UK, people who are in work but still relatively poor and still claiming benefits. So perhaps a minimum wage going up might, like, paradoxically reduce benefit claims because of the impact on that. And then efficiency wage theory, this is the idea that if you pay people better wages, they're more motivated, they have greater job satisfaction, they take fewer hours off, they work longer hours. Firms that pay above the minimum wage often have lower staff turnover. So for a lot of small businesses, it might help to address some of their recruitment and retention problems. So some utterly great answers there. Well done on that. Let's evaluate. Can you give me 2 drawbacks for the economy of this quite sizable increase in the minimum wage? Have a go. This is the evaluation. Again, think about the economy as a whole here. And our producers in-house will be looking at the answers as they come through and picking out some really good ones. That point from Jay there is really good. The one thing I would add to that is if you picked out a particular industry, small businesses in which industry, for example, would make it an application. Or Tom brings in the wage price spiral, and that would involve a good ADAS analysis there from Tom. Yeah, some great answers coming through. It's hard to, there's so many good ones coming through. So huge thanks for contributing. This is remarkable, really. A lot of people are there. Here's Jacob's point. Firms might lay off workers. By the way, if you use the word may or might, it's much better than will. It invites evaluation. The government will spend more on benefits. So it depends on the employment effects of an increase in the minimum wage. Absolutely right. Great point. Here are my two thoughts. There's so many points on this topic. This would be a great topic on the macro side. Yeah, so labour costs probably going to go up, especially challenging for small businesses. Particularly those of them who have low profit margins. And of course, that might feed through, as some of you were mentioning, to an increase in cost push inflation and employment. So some firms may cut hours or cut jobs or both. Might stimulate a move towards automation, particularly in things like security and retail. So there could be increased underemployment. People maybe have fewer hours. That increases underemployment, particularly in labour-intensive sectors where profit margins pretty small, and a lot of retail, small scale retail, has low profit margins. The big supermarkets, they're making the money, they can afford to pay above the minimum wage anyway. A lot of small businesses operating on the margin, especially with other costs going up, including energy and things like business rates. Well done on that, superb. This is really good. Hopefully you can see there's a macroeconomic aspect to that. Let's think a little bit penultimately about trade. So here's a chart showing the trade balance in the UK. We referred to it in a previous question, but you can see that the service balance is better than it was a few years ago, but it's in surplus, and the goods balance is always in deficit. And the question I want to ask is, why does the UK run a structural trade deficit in goods? So here's our question. It's a 1-minute explanation question. Can you pick out and explain, now this is really key, one structural cause of a rising trade deficit for countries such as the UK? Please do have a go at this one. This is not easy. So we know the UK runs a trade deficit in goods. Can you pick out a supply side or structural cause of a rising trade deficit? Structural hints at something long-term, underlying, nearly always on the supply side, whereas cyclical is the trade deficit rising and falling, rising during a boom, for example, maybe falling during a recession. So structural hints at an underlying change, and I think that's absolutely At that point, well done. Some great answers coming through, particularly about how. So here's Ria's point: deindustrialization, mainly due to globalization. Well, you can blame Thatcher if you want, but also we have structural shifts in comparative advantage. It's a dynamic change, So the rise of Mexico and South Korea, and who knows, within the European Union, structural change. TGM, the UK is a service-based economy, experienced deindustrialization. By the way, deindustrialization didn't just happen during the period of Thatcher. I would avoid mentioning Thatcher in the economics papers, by the way. Poor price competitiveness. Quite a few people here talking about productivity gaps in the economy, which was really good. So George Holmes, a lack of competitiveness in key industries. So they're struggling to export goods and services while facing competition from relatively cheaper imports. I just add in one word there, George: relatively cheaper imports. Sometimes adding one word to the answer gives it an extra kudos, an extra currency. Superb stuff. One cause I picked out is a low level of capital investment. So Britain persistently is underinvested. I know 17-18% of GDP. Other countries, USA 23%. Obviously, Biden's policies are designed to inject billions of dollars of extra investment, the infrastructure plan, the CHIPS Act and things. China, obviously, huge investment. Typically, the UK underinvests. That affects productivity because we have an older capital stock. It means we don't have a growing export supply capacity. So I would argue that low investment and low productivity really lie at the heart of this. Okay, so moving on to our last topic today, which is Brexit. So I have to mention that we did have a poll at the start, which should the UK rejoin the single market. Now, is Brexit on the specification? No. Is the single market on the specification? Yes. Are changing trade patterns on the spec? Yes. So it's 4 years now since we left the single market and customs union. We signed a trade agreement which basically provides tariff-free trade for most goods, but services, well, there's a lot of, and also for goods, there's a lot of non-tariff trade barriers now coming into play. But isolating the impact of Brexit it's complicated. We've had obviously the pandemic, we've had the Ukraine conflict. There's lots of moving parts in macro. So coming to a definitive view on Brexit is hard. Hard to disentangle the effects of Brexit from other factors. But let's have a go to finish with. Here's the data, by the way, on monthly trade with the EU, and you can see that there has been a very slow, in fact, negative growth of exports to the EU. So comparing January, not 2018, with start of last year, the value of exports of goods to the European Union were down. Now you'd expect it to rise over time because trade normally grows with a growing economy. And we have a trade deficit with the EU, but our trade is now only 42% of total exports. 20 years ago, it was 50%. Let's see what we can come up with here. I've got to ask two questions. Let's think about leaving the single market, leaving the customs union. Can you give me two potential benefits to the UK economy of that decision to leave the single market and the customs union? What can you come up with? Have a go. Our penultimate question today. Justify for me the UK economy decision eventually to leave the single market and the customs. Critically here, this is not Brexit itself. This is the decision to leave the single market and the customs. It's a possibility we could have stayed even after the referendum and the implications. We're not coming through. Let's take out some answers as they come through here. A great application there coming through. Ellie, the UK can create bilateral trade agreements with economies that may be more competitive, more suitable to their comparative advantage. Perhaps Ellie, countries which are growing more quickly. The European Union, of course, is a fairly slow-growing trade bloc, a bit of Eurosclerosis. So a lot of you talking about the opportunity, the autonomy the UK has to negotiate trade agreements. So if we can pick out a couple more, our producers will be scanning in the chat window. Jasper, we're not tied to trade agreements with EU countries. We can expand globally. Protection for domestic businesses through tariffs, which would otherwise be in place in the customs unions. Of course, the UK can now put in place its own tariffs. George talks about decreased regulation, potentially increasing business investment without excess sort of red tape. Evaluation, yet the UK is a developed economy. You can argue that, George, with high levels of regulation. Well, here are my 2 points, my 2 benefits. By the way, I need to register an interest here. I am strongly in favour of the UK rejoining the single market and doing a kind of Norway, but it may not happen. It will happen in my lifetime, but it may not happen in the next Parliament. But trade policy, yeah, I think that's right. So the UK now has the freedom to negotiate trade deals. A really good example, if you spotted it last year, so it could be in the minds of the examiners, is the UK trying to join the CPTPP, which is a bit like my forecast grades, which is the Asia Pacific trade bloc. That includes Australia, Chile, Malaysia, Mexico, and Vietnam. Really interesting. And policy flexibility. So that's a kind of catch-all, the freedom to reform migration policy, so replacing free movement with the skilled work visa program, free ports, open to some political controversy, less constrained by the fiscal policies. You can avoid VAT, minimum VAT rates. So a lot more policy flexibility. That's independent from the European Monetary Union, of course. We've always been able to set our own interest rates. So I think those are 2 coherent arguments in favour of leaving the single market. Are they convincing? It's up to you. Let's finish with this question. Last question today in our half an hour together. Give me 2 potential downsides of leaving the single market and the customs union. Team Economics, over to you. Totally. Great answer. Great answer. So what have we got here? Advantages, the deal, policy flexibility. I've got the terms of reasoning there. So Kirsty focuses on labour market, skilled labour shortages can't be filled, and labour cannot move easily to afford it, living within the European Union. Shay talks about economic uncertainty affecting investment. Nice point. More answers for the chat. Okay. Pause, everybody. Pause here. Sam has talked about the gravity effect of trade. Gravity theory, we tend to trade more with countries in close proximity. So we'll have increased prices due to tariffs and decreased ease of trade, suggesting there, Sam, a sort of cost of living effect. How much of the recent increase in inflation is due to Brexit? Very hard to say, extremely hard to say, but there must have been some effect. I've been downloading some papers that suggest there has been a sort of cost of living effect. And of course, you could then link that to the impact on low-income households. So it might be having an impact on relative poverty. And Dorothy has a lovely point. Reduced skilled labour migrating to the UK may lead to shortages of labour and lower productivity. And what I like about the answer from Dorothy is that nice link there to another macroeconomic aim, which of course is to try and address the productivity gap. Well, here are my 2 points. You know my views. Downsides. One is the trade impact. It's not so much the tariff that we have a tariff agreement, so free trade and tariff-free trade, but there are all these non-tariff barriers, these regulatory hurdles. There's quite strong evidence, by the way, that export growth from the UK to the EU has been hit, especially small businesses trying to sell products in the European Union. A lot of small businesses have stopped exporting, essentially. And certain industries more affected than others, financial services, automotive, manufacturing. So the risk is that the existing, persistent regional disparities may have been widened or exacerbated. And then there's the impact on jobs. So there's relatively strong evidence that leaving the single market has probably had a net negative on inward investment. Of course, we've got projects coming in. Of course we have. That's the case. But there's probably been a slower growth of net inward investment, and there has been a net loss of skilled workers from the EU. According to Cambridge Econometrics, I follow them because I went to that university. In 2023, GDP is estimated to be 6% lower than the 2016 period. In other words, if you follow a counterfactual, our GDP would have been somewhere between 4 and 6% lower had the UK remained in the EU. So my own view, for what it's worth, and I'm happy to defend it, is the UK should think seriously about renegotiating the trade deal and seek membership of the single market. But that's an open question. Could be a great exam question. There we go, folks. Half an hour of macro. Harbi, thank you. Can you get your votes in early, please, Harbi? Vote early, vote often. Well done, everybody. Half an hour of macro today. Tomorrow we're going to look at globalization, trade and protectionism. Some really juicy multiple choice questions and short answer questions and evaluation on international economics. Huge thanks as always for joining us today. Hopefully this half an hour revision is useful for you. If it is, press like and subscribe. But most of all, stay happy, stay positive, stay curious, and see you sometime soon.